Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC-TV18 Motilal Oswal studio.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. Thursday morning, we are coming to you live from the CNBC-TV18 Motilal Oswal studios. Lots to tackle. US-China is top of mind. There was Fed, lots of big earnings. And of course, our markets here, which are about 150 odd points on the Nifty away from an all-time high. I'm Prashant. With me, my colleague Surabhi and Mangalam is with us today. Guys, good morning.
Morning. Morning, Prashant. Morning, Mangalam. Let's get the pictures, actually. I think we've got some visuals as well. The most high-profile meeting taking place in Busan in South Korea. There, the handshakes have started. Then the talks, more or less, I mean, it seems to be like a foregone conclusion, should we say? Because that's what the US president has been posting about, saying he's very confident of that trade deal with China. So interesting. It's going to be center stage. But then we have so many global earnings, local earnings, and some very good ones at that we have to go over. But right now, Mangalam, it's all smiles there.
It's all smiles there. It's all smiles there as of now. Let's see how that goes. But, like you said, the prices are telling you that things are perhaps on the mend, not just between US and China, perhaps US and India as well. We got comments yesterday as well. So all these things looking good towards the end of this year as we move towards Christmas. There will be some sort of cheer. But be that as it may, the good part for me yesterday was thrice in the last 1 week, we crossed 26,000. But for the first time, we closed above 26,000 in a little over a year. So that's something that tells you that November series has started well.
And just one more point, guys, and we'll talk about this as we go forward. For me, the one cue that really was the biggest, brightest ray of hope yesterday was L&T's order intake. It's really blown past expectations. They're saying they're going to probably surpass their own order intake guidance for the year. And some people are already writing about whether this is a sign of finally that private capex cycle picking up or not. So we'll see. We'll debate this as we go forward. But yeah, we've got some good cues to start with.
You guys missed the those pictures when they came in. Did you notice President Trump looked taller than President Xi? No, I'm not kidding. President Xi is actually, I don't know, I'll have to check what his height is, but he looks
just
taller.
Google
Trump
it for you.
Taller. I don't know if they've done something there.
The tall statesman leading the world, Prashant.
Okay, all right. Well, let's just take it from the top then, right? In terms of what you need to know as we begin this fresh new trading session. So Fed is the first cue. They've cut by 25 basis points. They've sort of ended the balance sheet runoff, which is the quantitative tightening. And they're also, Powell sounded hawkish about December. And he basically said that, US equities, they ended undecided. I'll get to what he said in just a bit, exactly what he said. So S&P was unchanged. NASDAQ was up about 0.5% or so. So Powell essentially said that rate cut in December is far from a foregone conclusion. Many are saying, well, this is kind of hawkish, right? But what else could he have said? He couldn't have said, well, we are going to cut in December and, this is the start of a big easing cycle. Even if it were to be a big easing cycle, central bankers typically like to keep a little bit of suspense out there. I mean, otherwise, the trajectory is set and markets start to price all of that in the very, very near term, which then leads to problems, second-order problems. So, and that's the reason why. While yields went up, 10-year was up about 9 basis points, about 4.07. Markets have not budged, despite the December comment from Jerome Powell. Markets are still expecting a cut. The consensus market pricing is still for a cut in the month of December. So that's it. Otherwise, I mean, the Fed meeting was last, except this bit about December, it was largely not very, there was nothing very surprising. There were two dissents, one basically asking for a pause, the other saying, well, it should not have been 25, but 50 basis point cut. That's President Trump's man on the FOMC now. Now, the other one, of course, is the outcome of the Trump-Xi meeting. The pictures are coming in, but the outcome, I think, is what we need to wait for. Will we get a bit of a framework kind of a deal, the outline of a deal? And directionally, no further hostilities, I think, is what the market is betting on, even if we don't get very, very much in terms of specific details, because a trade deal, an actual deal between two countries, and let alone the size of US and China, will take some time. But maybe a framework deal and end of hostilities, at least for now. Nvidia is the other one, right? Hit $5 trillion in market capitalization last night. And of course, I mean, here also there's the China involvement. Hope that NVIDIA will be able to get back into China, sell their Blackwell chips, etc. And of course, I mean, NVIDIA in the GTC event showcased a lot of their capabilities, lots of partnerships, etc. Big earnings overnight. All of them reactions aftermarket. Google stock in the aftermarket is up 7%. Meta, Microsoft are lower in aftermarket. I mean, numbers are okay. Numbers are actually good even for Microsoft. Meta may be a little bit higher in terms of guidance compared to what they said earlier, capex guidance. But there's a fair bit of positioning, etc., involved with these bunch of stocks which has attracted so much flow. Apple and Amazon, by the way, report numbers later tonight. Now, numbers don't change for as far as the levels are concerned. For the Nifty, the resistance is 26,104 and 26,227. That's the range. And we're very close. I mean, as I said, 150 odd points away from the all-time high, which is 26,227. On the way down, the support zone is 25,718 to 25,665. You could also trail the 40-hourly exponential, which we are above. You got the Bank Nifty, which needs to cross the high of 58,577, again very close. And then, of course, past that, 58,961, 59,895. These are extension levels of the last move. And Bank Nifty support comes in at the low of 57,482. GIFT Nifty gives you a quick sense of how we likely to start, and then we'll pick it up from there. 44 points lower on the GIFT Nifty after yesterday's 100-point move high. But this is just the start. We'll have to sort of see how trade progresses. Indicative open on your screen. But what's the F&O positioning looking like, and where are we at? Mangalam, take it away.
Well, I'll just tell you about the F&O positioning, but before that, a closed loop here, which is Xi Jinping's height. That's 5'11", and Donald Trump's listed height is 6'3". So the difference actually is looking a lot lower than what, the reported height of both these gentlemen is. That's about 4 inches. Sorry?
6'3".
Obviously, he's among the tallest that we know of in the developed world, at least. So 6'3" is President Trump, Xi Jinping between 5'10" and 5'11". There you have it. Okay, and the difference here is actually looking a lot less than the reported this thing.
So actually, I had it backwards then because I thought
Ray was taller.
Yeah, I thought but anyway, we have it settled now.
We have it settled now. Let's walk to the F&O desk and tell you a little about what the setup out here is. So if you look at the frontline indices yesterday, the start to the November series wasn't particularly bad. We had the Nifty closing above the 26,000 mark. The Nifty Bank picked up towards the latter half of trade, and it's the IT index which actually had been fairly resilient. More importantly, we closed above that 26,000 mark, and that's very crucial because over the last 4 or 5 trading sessions, every time we crossed past that 26,000 mark, 26,104, which was the October 23 high, we closed below 26,000. But yesterday, the high was 26,098 and the close was 26,054. So we did not give up much from the day's high. That's speaking about resilience. At the same time, we are just a very short distance away from the all-time high of 26,277. So 26,000 to 26,277 is what the option writers are believing that the range for the market would be. Why do I say that? Because if you look at the 26,000 put, premium of 90 rupees telling you between 25,900 to 26,000 is an important support zone. So to that extent, the GIFT Nifty's gap down is perhaps a positive for the bulls. On the way up, however, call writers are active at 26,100 for a premium of 161. Add 161 to 26,100, that gives you 26,261, very close to the record high. Also, if you add about 100 points to 26,200, so between 26,250 to 26,300, if and when we were to hit that record high, there could be some profit booking, which cannot be ruled out. But apart from that, if you look at, the FII action in index futures, they continue to sell after having started the series fairly well. So yesterday, they sold about 1,200 crores, added about 6,500 long contracts. And when they started the series, they were 20% long. Right now, they're 19% long and 81% short. That's actually not a very bad thing. In fact, we've been making this point over the last 2 series or so. And if you look at, the F&O positioning of the FIIs and the subsequent movements of the Nifty over the next few months. If you look at it in April 23, the FI started with 9% long exposure. Over the next 4 series, the Nifty was up 2,500 points. November 2023, FI started with 11%. The next 2 series, Nifty was up 3,000 points. As recent as September 2025, when the FI started the September series, they were just 8% long, went lower to October at 6%. And over the next 2 series, we've already gotten 1,500 points. So let's see where that goes from here. The one stock that I'll be watching out for today in particular would be United Spirits, because it was fairly well bid in trade earnings today, and it has crossed the 200-day moving average with a lot of long positions being added on this counter. So far, the numbers that have come in from this space have been fairly positive, the likes of Radico, Khaitan, etc. So let's see whether United Spirits follow suit.
Speaking of Radico Khaitan, Manglam, I was at a concert in Mumbai,
The Enrique Iglesias
concert, and all I could see was phenomenal marketing by Radico. They had captured everything out there. So, yeah, it's an interesting way of introducing premium products, perhaps. Catch them young, catch them early, so to speak. Anyhow, let's get back to the big global story now. And before we introduce our first guest on the show, let's hear out some of the commentary that started coming in from the sidelines of the all-important Trump-Xi meeting. And for the time being, it's all praises for each other at a personal level and, of course, for the great two nations as well. Hear it out from the U.S. and the Chinese presidents.
And we're going to have a very successful meeting, I have no doubt. But he's a very tough negotiator. That's not good.
Mr. President, do you plan to sign a trade deal today?
Could be. I think we'll have a great understanding. We have a great relationship. We've always had a great relationship. Well, thank you very much. It's a great honor to be with a friend of mine, really for a long time now, if you think about it. The very, very distinguished and respected President of China. And we will be having some discussions. I think we've already agreed to a lot of things, and we'll agree to some more right now. But President Xi is a great leader of a great country, and I think we're going to have a fantastic relationship for a long period of time. And it's an honor to have you with us. Thank you very much.
Since your re-election, we have spoken on the phone 3 times, exchanged several letters, and stayed in close contact. And our joint guidance, China-US relations have remained stable on the whole. Given our different national conditions, we do not always see eye to eye with each other. And it is normal for the two leading economies of the world to have frictions now and then. And in the face of winds, waves, and challenges, you and I, at the helm of China-US relations, should stay the right course and ensure the steady sailing forward of the giant ship of China-US relations.
You have it, comments from both the sides. Now, what does all of this mean for the global economy, for global markets, and where does it leave India, our own tryst with the US in getting that trade deal done? Let's discuss this and more with Jahangir Aziz, Head of Emerging Market Economic Research at JP Morgan. Jahangir, morning, great to have you in. So there you see, I mean, the tone is always right, the smiles are bright, and I think the teams have done their homework in the background, right? That this framework is more or less done. So what is your base case that you're going with? That, they reduce tariffs to what levels? I mean, does global trade, free-flowing global trade start between the US and China? And if yes, what does that mean for the market? More animal spirits, more upside?
So we might be less enthusiastic about the Xi Jinping-Trump meeting than you are. So we basically think that things are going to go back to what it was pre-October. So if you go back to the pre-October, you had about 35-40% tariffs, and there were talks that they were going to come to some agreement on rare earths in exchange for possibly some technology, restrictions being eased. And then in October, not the U.S. Treasury or the U.S. Trade Representative's Office, but the Department of Commerce put out a series of technological restrictions, which led to this, increase in rare earths restrictions, and then was followed by the U.S. threatening 100% tariffs. Our view is that we are probably going back to pre-October, so around 30-35% tariff on China, and maybe some easing on trade restrictions, not just from the U.S., but also from Europe. But beyond that, we don't really think that there's going to be anything fundamentally new that will come out of these meetings.
Do you expect a deal? What's the outcome here, Jahangir? Just in terms of actually, will there be a document? Do you expect like a joint press conference?
My guess is, my guess is there's going to be some form of communication either from the U.S. Secretary Bessent after the meeting, or from the Chinese side, or both together. But I doubt whether the two presidents are going to have a joint statement. So that I don't expect. But there might be something, joint communique from the two, the vice premier from China's side and Secretary Bessent from the US side. That is possible. But then, when we talk about deals, I mean, we've talked about, lots of deals being done, but none of these deals are actually negotiated or valid trade agreements. None of them have been passed by Congress. And I think you were flashing it a few minutes ago that the Senate had already rejected the tariffs on Brazil and also on Canada. So unless these trade deals are actually signed into trade agreements, their validity doesn't really exist in law. And then you run into the November 5 Supreme Court hearing on IEEPA. All of these trade deals are sort of based on IEEPA kind of tariffs, right? They're not really based on other specific tariffs. So if the court basically says that the lower courts were right and that IEEPA tariffs are invalid, then we're back to square one. Because there are none of the trade deals have been converted into trade agreements, so they don't stand. Therefore, you need to go back to the drawing board and restart all of this with new tariffs in different sections of the U.S. trade acts being used. So I think, we need to wait and see how the Supreme Court decides before. Even if I don't think even that the White House is going to put them up for congressional approval even before that.
So many things happen yet, the risk of nothing happening is still intact. Prashant, you said whether there would be a press communique or not. I would bet my money not on any official conversation, but Truth Social post by Donald Trump.
That is the official channel of global diplomacy these days.
Jahangir, where does that leave the conversations that India and US are having? Not only did we hear from Donald Trump on Xi Jinping being a tough negotiator, he said that Prime Minister Modi also is a good friend and a strong negotiator here. What would you say, would be the outcome of the India-US deal conversations that would happen?
That's somewhat harder, right? In the sense that the first 25% tariffs, which is the IEEPA tariffs, right? Those were done on grounds of, unfair trade advantage that presumably that's what alleged by the US. The other 25% is on, buying Russian oil. I really don't think that, at least not from my understanding, that there has been any significant progress on either side on either of the two issues. Now, geopolitics is geopolitics and things can change overnight. So I wouldn't be surprised if there is some sort of an, coming down on both the US and India's part. But it's hard to see the kind of fundamental differences that US and India has on agriculture and things of that nature, where US really wants to see India draw down trade barriers, India accepting those reduced trade barriers. You could see things happening in other directions, but I don't see that happening. And then, of course, there is still the concern over services tax. We know that the Hire Act was pulled off the Senate table, and most likely the Hire Act in its current form is unlikely to come back to the Senate table. But it can easily come back in some other form. My guess on H-1B visa is that there is a significant amount of opposition and concerns being raised by US firms themselves for that to be negotiated or to be reduced. But by and large, it looks like a tough situation where don't really see what either of the two sides can offer to bring that 50% down to something more reasonable.
That court ruling is going to be interesting, right? Although I'm not very sure now how will markets react. If the court rules them illegal, is it good news or bad news?
So that's a difficult question. So think about how is the 10-year being anchored? The 10-year right now is being anchored on the assumption that there is going to be around $300 to $350 billion of tariff revenues for this year and similar amounts for next year. That's what's giving you the anchoring of the 10-year rate. So if you're going to say that IEEPA tariffs are off, and we don't know what it will be replaced with, and we don't even know that what it'll be replaced with will be anywhere close to giving you the $350 billion of tariff revenues, then one of the largest anchors of the 10-year rate is off, at least till the US comes back or reimposes with tariffs that satisfies the bond market. That's where the concern.
And Jahangir, very quickly, speaking of the bond market, Fed delivered 25 basis points yesterday, but then markets are a little worried because they're saying it's not a foregone conclusion that we'll give you another 25 bips in December.
Yeah.
Combined with this whole tariff uncertainty and whether that $300 billion, $350 billion will flow in or not, where does that leave policy over the next couple of months?
So again, I think the Chairman Powell sort of said it right, in the sense that, if you're facing fog and you can't see more than a few yards in front of you, you slow down, right? Which is basically what's happened with the government shutdown. The government shutdown may not have that big of an economic impact, but it's clearly having an impact on data flow. And with the lack of information, it's very difficult to see the Fed going, gung-ho on aggressive rate cuts in the absence of data on the labor market side. Our view is that, look, you are still going to get the 25 basis points of rate cut in December because if and when the government opens, most likely the labor market will show continued sign of weakness.
Okay, all right. So not changing your view for December. Thanks very much, Jahangir. Great conversation.
Sure.
And a lot more to talk about. Maybe we'll request you to come back once we have the outcome of this China-US meeting, right? The first in 6 years. Thank you very much for joining us. Well, let me just quickly run you through what's coming up here over the next 2.5 hours or so in terms of interactions which are lined up. Raymond will be speaking with us at 8:35. Amit Agarwal, you'll hear from him on the earnings. 9 o'clock, Nikhil Nigani of Bernstein. So there's this big power revival plan. The state government is saying, well, we'll bail out provided you do, you sort of meet a set of conditions. State discoms that is, and is material for power companies, listed power companies. 9:20, Manish Sontalia talks markets with us. 9:30, we have the management of Sagility on their second quarter numbers. Abhishek Khaitan of Radico will be speaking with us at 9:40. Again, numbers came out yesterday in the last hour. We have Balaji Subramaniam of IIFL Capital and Sanjay Asher of Crawford Bailey joining us to talk about the sort of, in a way, a reassessment, rethink in terms of what the Supreme Court, the actual order said with regards to the Vodafone Idea AGR dues case. And towards the end of the program, it's the economy, Lata in conversation with Vishwas Raghavan of Citi on US and global growth momentum and whether foreign flows will turn back and come back into the country. Take a quick break. We're back with our research team, Top Stocks. Lots to track there as well.
Welcome back. So we've discussed the global picture, the big trade deals, the macro picture with the Fed. Now it's time to boil it down to individual stocks and action. Let's put up, by the way, the implied open because I was constantly indicating that we'll have a slightly cautious start. So it's still down about 60-odd points. So we'll see how it goes. Asian markets are also trading fairly mixed right now. But like I said, let's now boil this down to stocks because there are lots and lots of very important names that we need to keep on our radar. So to kick things off, we have Ashmit now joining in. And this is really important for Vodafone Idea. Now, just days after allowing the centre to reconsider Vodafone Idea's AGR dues, the court yesterday uploaded the judgment itself. And the judgment seems to be indicating that the scope of this, of this judgment is fairly limited. It doesn't seem to be giving the government an absolute free option to do whatever it wants on the AGR matter. Ashmit, please do explain the specifics to us.
Well, on Monday morning, the Vodafone Idea went through the roof is when the Supreme Court had given oral directions that they don't want to intervene in the AGR issue, that this is a policy matter. They want to leave it open to the DOT, to the centre, to decide how best to resolve this issue. However, cut to Wednesday evening, last evening, when the formal order was published on the website of the Apex Court, the fine print became clear, and now more questions seem to have arisen rather than answers. Questions, why? Because, well, Vodafone Idea had asked for a gamut of reliefs. It had asked for the AGR additional AGR demand. It had also asked for recomputation of the overall AGR due, citing arithmetic errors. It had also asked for a waiver of all the dues concerned with respect to penalty interest and interest on penalty. The Supreme Court, however, towards the final portion of its order, which was uploaded, very clearly says that the only relief that Vodafone Idea is asking for is the additional AGR demand under challenge, which again adds up to only about 9,400 crore rupees, which pales in comparison to the overall, the mammoth AGR figure that stares Vodafone Idea in the face. So a number of questions come to light. Can the DOT, if at all, if it can grant relief, is it only confined to additional AGR demand of about 9,400 crore rupees? Can the DOT travel beyond this additional demand to address the larger, the mammoth figure that is staring the sector in the face? And number three, can this relief, if any, that has to be contemplated, can it be only specific to Vodafone Idea, or can it be sector-wide? Can it also be extended to Bharti Airtel, which again is interesting because the Supreme Court says this order is being granted only with respect to Vodafone Idea. So again, a number of questions that now need answering from the DOT.
Right, and what about Dr. Reddy's, Ekta? The weight loss drug looks like it's going to be a little delayed.
Well, yes, definitely disappointing news which is coming for Dr. Reddy's, and they had indicated that in their Q2 numbers, where they had indicated that they cannot rule out a complete response letter from the Canadian regulator, and that's exactly what's taken place. They've received a notice of non-compliance for semaglutide or Ozempic generic in Canada, and basically the Canadian regulators have asked for additional information. What they have said is that they are committed to launch the drug in Canada, but the street is now wondering when that timeline would be, because semaglutide, the patent expires in Jan 2026 in Canada, and it is expected to be a competitive market. There are at least 5 other filers who are expected to possibly get approvals or maybe look at some sort of timeline for approvals. So it really depends on what opportunity Dr. Reddy's would have based on, one, when they get approval, which could possibly be delayed from, say, 5 months to 12 months, and second, when will the other companies get approval, to give you a sense in terms of how competitive the market is going to be and for how long. The street had anticipated around $100 million in terms of sales from this particular drug in FY27, and now I think the street is probably going to be revising that. The ADR itself is down around 8%, giving you an indication in terms of the hopes built up for this one.
All right. That's the big drug, right? Not just for Dr. Reddy's, but expected to be one of the largest drug categories ever, if estimates are to be believed. L&T is the next one we want to focus on, and numbers were looking pretty good. Order inflow especially is the focal point. Vivek is here with details. Vivek, morning.
Well, good morning. That's right. The order inflow is something that the street will take a lot of cheer from. Well, on the P&L front, a slightly mixed bag. Execution on the back of the fact that there was significant unseasonal monsoon that Q2 witnessed. The P&L is a slight miss across our estimates. So revenues, coming in at close to 67,983 crore, higher by 10%. When you're talking about the EBITDA, again a marginal miss, 6,806. Now looking at the EBITDA margins, it's coming at 10%, largely in line with estimates. Management pointed out 2 key reasons for EBITDA being soft on a year-on-year basis. Number one, legacy orders, the revenue recognition came in this particular quarter, but that's being phased out. And also, when you're talking about the newer or the new legacy orders that are coming in, these orders are yet to reach the stage where revenue recognition will come. But going forward, the management has indicated that the margins will improve, and profitability too, largely in line to a slight miss. So expect some profit booking, given the fact that the stock actually saw a bit of a run-up going into Q2 results. Now, talking about the key highlights, from the media call that the management held. Number one, core ENC margins came at 7.8%, higher by 20 basis points. The company has called out a revival as far as private sector investments is concerned in the domestic market. That's that will give a lot of cheer, especially as far as the entire capital goods space is concerned. And doing a quick guidance check, remember the company had given a top line guidance of 15%. They are largely on track to meet that. Core margins, they had given a guidance of 8.5%. H1, they are tracking at 7.7%. The management has indicated it is still a work in progress. Order inflow guidance of 10%. Management says that they are well placed to exceed that order inflow guidance, and both the L1 order position as well as the order book as far as H1 concerned clearly indicate that they will beat the order inflow guidance.
That is sounding really, really good. And like you said, may just light up the rest of the capital goods space as well. So we'll keep a track on that entire segment of stocks. Vivek, thank you very much for that. That's L&T at the end of Q2. Let's get to Sonal. Talk about how HPCL has done. Sonal, was it as good as IOC, those GRMs?
Oh, yes, it was a beat led both by the marketing and refining segment. Yes, on a sequential basis, it's a decline, but the numbers are much better than the poll. So revenues at 1.01 lakh crore rupees, EBITDA has come in at 6,900 crore rupees, which compares with the poll of 5,900 crores. Margins 100 basis points higher than the poll at 6.8, and profits also higher accordingly. GRMs have come in at $8.8 per barrel versus an expectation of around $6.5 per barrel. Company says pre-commissioning activities of their big expansion at Vizag is underway, and if that happens, it could lead to incremental GRMs of around $3 per barrel. So that's a big uptake. Jefferies, on the back of these numbers, has increased their EBITDA estimates by 48% and 29% for the next two fiscals. Morgan Stanley says their marketing volumes grew 3.5%, which is higher than the industry average of around 2%. And Nomura said second quarter beat was led by stronger GRMs, so all of them are positive on the stock.
All right, take that point. Thanks a lot for that, Sonal. Let's talk about BHEL. Vinny, a sharp margin expansion.
Absolutely, a sharp margin expansion as well as improvement in terms of profitability of the company. That is what is leading to the healthy performance in Q2 FY26. Now, looking at the numbers, revenue, yes, it's all 14-15% growth this time, but versus our CNBC-TV18 poll, a bit of a miss coming in there. Other than that, EBITDA, a strong beat there. EBITDA margins, a strong beat on that front as well as in terms of net profit, a beat here as well. Margins came in at 7.73% versus 4% last year. So sharp improvement in terms of margins of the company. Now, what has led to the improvement in terms of revenue? One, obviously execution. That has started improving. That's the indication that we're getting. Lower other expenses and improved margins across the segments, whether it's industrial or power segment. That has led to the improvement in terms of profits as well as overall margins. Improved execution in power segment is a key. They've seen healthy order book over there as well and healthy EBIT margins in the power segment. Strong order book also is what they're watching out for. Industry segment has registered also a very strong growth this time. Healthy performance there. Overall improvement in terms of order inflows as well as order backlog. That is something interesting and we'll be keeping an eye out on going forward as well.
Okay, all right. Vinny, thank you very much for that. Steel Authority of India is the next one we want to highlight. SAIL was, I think, one of the biggest volume-led gainers yesterday, and Sud is here with the numbers. Sud, over to you.
So yesterday on the earnings fronts, it was the day of PSUs like BHEL and and HPCL. SAIL also has reported Q2 earnings, and those earnings looked very strong. And one of the main reasons was the company has reported lower than expected drop in realization, and that led to a beat in operational numbers. Revenue has come in 8% higher than our expectation. EBITDA has come in almost 30% higher against our expectation, and margin too has expanded by 150 basis points to 9.5% versus our expectation of 8%. Volumes too have seen an increase of almost 7% to 4.9 million tons. Apart from the earnings, one of the biggest positives was the reduction in net debt. On a sequential basis, net debt has come down by 8%, and since December of 2024, net debt has fallen or is down almost 22%. So overall, it's looking very positive for SAIL, and that's the reason yesterday also stock was sharply higher, and for today, I'm going with green.
Okay, all right. So got that. Thanks very much. Let's hop across to Yash. Yash, morning. PB Fintech, how are the numbers?
Well, the numbers for PB Fintech in the second quarter look strong. The total income, that has grown by nearly about 40%. The revenue, which is the commission and other income which they generate from themselves out of the premium generated, that has grown by about 38%, so strong growth there as well. Now coming to the operational performance, the insurance core online revenue, that has grown at about 37%. The credit growth still remains slow, down about 22%. Contribution has come in strong. Contribution margin at 29% versus 27%. Adjusted EBITDA at 156 crore as against 56 crore. And margin at 10% versus 5%. So strong numbers overall for PB Fintech in the second quarter of FY26. The stock hasn't done much, up about 2.5% in the last 1 month, in the red for the last 3 months. So, of course, going good for PB Fintech today.
Right, going good for PB Findex. So let's get in a couple of cheers coming in from United Breweries. Not so much this time round, largely because of stronger than expected, monsoons, and that impacted their volume. So the revenue of the company was 2,051 crores. The street was working with a number of 2,156 crores, and that percolated all the way down to the EBITDA as well, where margins were just about 6.3%. The street was working with a number of 9.5%, and the net profit eroded down almost 65-70% year on year. Gross margins were down 100 basis points, and other expenses increased as well. Finance costs increased over the same time last year, and that caused a bigger dent in the net profit. But the volume internals were fairly steady as expected. Overall volumes fell by 3%. Street expectations were 2 to 5% decline. Premium volumes increased by 17%. That's been a trend where the expectation were that of 15 to 18%. So those parameters in line see mild red on United Breweries, and perhaps on the prospects of better performance going forward, we may see some recovery as well.
Okay, so that's United Breweries. We'll keep that on the radar as well. Let's quickly recap a list of top stocks to watch. The ones that have positive news flow are HPCL, BHAL, SAIL, and PB Fintech. Stocks with either negative news flow or slightly lower than expected earnings would be Vodafone Idea, Indus Towers, Bharti Airtel, Dr. Reddy's Laboratories, L&T, and United Breweries. Okay, that's the stock list for the morning. Let's now figure out what's happening in the world of commodities. Manisha is joining in with the latest. Manisha, morning. So the Fed has delivered. What's the headline?
Oh, well, yes. But the Fed also has said that there perhaps is not going to be another rate cut in the month of December. And that doesn't augur well for many of these commodities, especially the gold and silver prices, which in any case had been declining because of that US and China trade conversations. We'll perhaps hear a headline from there as well. But gold and silver both have eased, and we've seen them turn into negative on a week-on-week and perhaps on a month-on-month basis as well. So as Fed's Powell warns that December rate cut is not a foregone conclusion, is what the markets are working with. You have seen the dollar index gain to 99. The 10-year Treasury yield is also surged to above 4%, and that's what's bothering markets here. If you look at the overall central bank buying, that also seems to have declined for the month of October, and ETF as well has seen some redemptions. Markets believe that the weak hands have gone out. Some consolidation is perhaps what you can see in gold and silver, but there is some profit taking that we are looking at in base metals as well. So from its highs of yesterday, where zinc was trading at a 10-month high, aluminum at a 3-year highs, copper near all-time highs, all of these three base metals also are trading 0.25% to 0.5% on the lower side. So no buying activity is what we are seeing in the Asian markets onto this one as well. And same goes for crude oil prices. That one is headed for a third monthly decline. It's down 2.5% for this month, down 16% for this year as well. The next headlines, of course, would come in from US and China statements therein, what agreement details are, and that would give you a further direction.
Okay, all right. Manisha, thank you very much for that. That's run through as far as the commodity price action is concerned. We are back in just a bit. Take a break. Raymond Management with us on numbers on the other side. Stay tuned.
Welcome back. Well, let's straight away get to our first corporate conversation of the day. The company on our radar is Raymond Lifestyle. Now, Raymond Lifestyle has reported a fairly steady set of numbers for the second quarter. Revenue growth has been led by domestic demand. The textile segment growth has been led by robust volume growth. Amit Agarwal, Group CFO at Raymond Lifestyle, is with us now. Amit, thank you so much for being with us. So I'm just quickly going to go over the numbers. Your revenue is up about 7.5%. Your margin has remained fairly steady at about 12.3%. Profits have grown quite a bit. I mean, profits have jumped over 70%. So the three talking points is, the demand boost from GST cuts real. We want to sort of address that. Then we want to understand if there is any deferral or cancellations in the export orders. And of course, if you want the guidance. Let's start with domestic demand first. What's the sense after the GST cuts have been implemented, and also within your channels, the way the pricing or inventory adjustments would have had to be taken? How are things settling? And what is your view on domestic demand?
Thank you for having me on the call. Now, it's always a pleasure to talk about this because considering the GST cuts which has happened on 22nd of September, we have seen very clearly that there has been a consumption pickup. And that is one reason. The second reason is this year, people are coming out considering that inflation has been lower, as well as the interest rate cuts has enabled more liquidity in the hands of a common man, and even the direct tax cut which we saw in the budget. So I think all that is fueling the demand, and we have seen very clearly in terms of our bookings for the fabric business, very clearly it has grown compared to the last year in the range of 8 to 10%. And we are seeing also volume growth in the domestic business, clearly both in the fabrics as well as apparel business. And going forward, we are looking a very strong wedding season, because there are a large number of dates for the weddings and it is continuing all the way up to May. So we are seeing a good traction in the domestic across the channels. The inventory has come down across the channels. So people are buying, and therefore we expect a stronger year this year.
You know, a large part of garment buyers, Amit, Mangalam here, were saying that they are preponing their buying for the ones they're buying above 2,500 rupees. Did you see that at Raymond as well? And could you put a number to how much that was in the second quarter for you?
Actually, there was a very small period when it came the announcement. So you would be having very difficult. But what actually we saw, because when we do the primary sales, a lot of our franchisees, dealers were reluctant to buy during that period. However, when I look at the data for our outlets and the stores, there has been a little bit increase in the period from 5th to 22nd. But can I say it is really significant that people did a preponement is difficult to justify.
All right. Second half of this year, ethnic wear, the first half grew about 11%. That has been a growth driver for you. Alongside that, there are other, newer categories, sleepwear, innerwear, etc., which would be growth drivers as well. Sleepwear and innerwear, I wanted to understand how that performed. Innerwear faced some challenges. So your ethnic wear, sleepwear, innerwear, what's the prognosis for the next couple of years?
Yeah. So look, let us talk one by one. In terms of ethnic wear, clearly the first half is not so much relevant because of it is more wedding and festivity related sector. And that we will see in the second half. Based on the conversations which we are having with our franchisees or dealers and EBO operators, they are saying there is a good traction because of the wedding season. As far as the sleepwear as a category is concerned, we are in the process of category creation. There is no such category in India as of now in a large scale sector that a sleepwear is a category that one would go really and buy out. And especially maybe in tier 1 people do, but tier 2, tier 3, 4, which is a large market, there people are not really doing that. So it's a category building. As far as innerwear is concerned, we all know that in the second quarter, there has been a bit of a struggle in this sector, and everybody went out for massive discounting, increasing the commissions to the wholesalers and the retailers. So I think it goes through the ups and downs, always innerwear, and once it comes back. So we expect these are smaller sectors for us. I think our big focus clearly on the fabric and the apparel side, where in the domestic side, you have seen a good growth. And what we are more pleased about is it's a volume-led growth. It is not a price-led growth.
Take that point. Yeah, so let's wrap this up then. Amit, first half, revenues have grown 12%, margins at around 11.5%. When we speak, by the end of this year, what should your revenue look like and what would your margins look like?
So I would not go definitely on a guidance basis, but what I can tell you, this year is going to be much stronger compared to the last year, and we will be in early teens, the growth in the revenue compared to the last year, as well as in the profitability of the business.
All right, Amit, we'll leave it there. Good conversation as always. Thanks very much for joining us, and good luck for a good quarter, that is October and December. Appreciate it. We'll take a break. Deepan Mehta is going to be with us on the other side of Elixir Equities. Stay tuned. Coming up.
Welcome back. The GIFT Nifty indicating a slightly lower start right now. When we started the show, it was down about 40 points, now down about 62 odd points. Nothing really to worry about. We'll see how it progresses from here on. But a bunch of numbers that came in yesterday and a lot of numbers that are likely today as well. From the FMCG space in particular, you have ITC, Dabur, you have Pidilite as well as United Spirits reporting numbers as well. So good time to welcome Dipan Mehta, Director at Elixir Equities on the show now. Dipan, good morning. What do you make of the numbers that came yesterday? L&T, the big one, the order inflow was good, but some would say perhaps some part of that is in the price and maybe there was a slight disappointment on the execution front because of higher than expected monsoons. How do you look at L&T and BHEL, which showed a margin expansion as well?
Mangalam, good morning and thank you for having me on your show. First, disclosure that we have shares of L&T in our portfolios and that of our clients as well. And I thought exceptionally good order book build-up and a lot of it coming from the Middle East as well. And so the diversity of the order book certainly offers comfort. But I think execution was a bit disappointing. But look, we have great earning visibility and I think the stock is reasonably valued. At the same time, in our view, L&T is amongst the handful of nifty companies which can still grow in kind of mid-teens type of growth rates over the next few years or so. So I think it should be part of everybody's core holdings, according to us. And very pleased with the numbers and the way it's shaping up, with disappointment on the execution front. BHEL is looking more and more interesting, astonished by the kind of order book position that they are sitting on. And certainly going to dig deeper into this stock. As I understand, I think it's 6-7 years type of order book position if you compare to the trailing 12 months. And that certainly is quite interesting because eventually lead to higher profit margins as well. And that could lead to very good gains going forward. I would rate BHEL as an outperformer.
And generally, Deepan, morning, PSUs have earnings, I mean, they're all disaggregated sectors, and HPCL, for example, is strong. SAIL reported numbers, and there seems to be a bit of momentum building as well, not just on the banking, PSU banking side, otherwise as well.
That's right. I think that's been the real phenomena under the Modi government, that the PSUs, which were ignored and which had given very, very disappointing returns, right until the Modi government came on board, we have seen them to be great wealth creators. And it's across the board, I think. It started with the defense companies, it started with with PSU engineering companies. Now we are seeing good returns coming through from the PSU banks, where the actual performance also has improved. And now I think across the board, the final frontier, of course, were the oil marketing companies, which were laggards. But I think the government is explaining these companies better. And there's a better transparency also as compared to before. And we are seeing the numbers come through for a lot of the oil marketing companies, where the play is all about less trading of refined products and more of in-house manufacturing, where they get the benefit of refining margins as well. The only issue with oil marketing companies is the very low volume growth. For example, HPCL, I've read somewhere, was just 3.6% volume growth. So while the gains will be there in the margin improvement and also backward integration, so to speak, but company growing at 3.6% volume growth, I kind of just want to wait and watch and let us see whether the P multiple actually expands.
They might just buy an oil marketing company, right? That'll be the day. I think you've not so far. You've stayed away, as we've discussed in the past. But
Prashant, I'm getting increasingly positive on these companies.
Yeah. I mean, I think that Hardeep Singh Puri here, the minister in Bombay, meeting analysts, investors, that I think that was also a bit of a turning point. Not turning point, maybe it's but he, as you said, explaining the companies better.
I was there for the meeting. They put up a very interesting show.
Yeah.
And all the top management of all the three oil marketing companies were there, and they were speaking in a very transparent and open manner. What investors should expect from this company.
I missed it. I wanted to be there as well. But it's something. We'll take a break, Deepan. A lot more questions I want to ask you about Dr. Reddy's, Idea, Vodafone, etc. as well. So stay with us. Have to take a break, and we are back in just a bit. Okay, Sudarshan Sukhani and Mitesh Thakkar are with us. There's about, 14 minutes to go for the market open. The pre-open is ticking on your screen, slightly lower at this point. Gentlemen, morning. Great to have both of you here. Appreciate your time. Mitesh, you go first. How's the setup this morning and what would you do?
Good morning, Prashant. So we've kind of maintained that we will most likely retest the earlier highs, that zone of 26,150 to about 26,220, give and take a few points. And broadly, there is a chance of us breaking beyond that. But in the short term, that level will still be important and will attract a lot of supply. So you can believe that 25,800, 26,200 broadly is the range which we are working with, and eventually waiting for an upside breakout.
Okay, so looking out for that upside breakout, got that. Mitesh, Darshan, morning to both of you. So Darshan, what's your advice for today? What's the approach?
Yeah, good morning. See, the approach remains the same. The trend is up. We are going to see choppy markets. It's not as if the markets will oblige us every day. Today's dip, if it comes about, and it may, is a buying opportunity because your stops are very clear. That's 25,800 on a closing basis. So far as the Nifty is trading above it, minor corrections should be used to buy and assume that the trend is up.
Buy the dips and keep riding the trend on the upside. Got that, gentlemen. Let's talk stocks. Mitesh, what are you working with today?
Yeah. Good morning, Surabhi. I have all buy calls today. Gas Authority was a call, I think, earlier as well. It's broken out of a contracting pattern with good jump in volumes yesterday. So buy with a stop at 182. The first target should be around 191, 192 on the upside. Also a buy on Coforge, which, after a good gap up 3 days back, or rather on Monday, has given a good pullback. Now gives you a favorable entry point. So keep a stop below 1775 here. Look for targets of 1840. Biocon managed to get past a swing high. So buy with a stop below 367.5 for targets of 385 to about 387. And the final stop call is ABB. Buy with the stop at 5,200. Try to buy when a mild decline. So around 5,280, 5,260 is the buying zone, and look for targets of 5,400.
Sudarshan, what about you?
Well, it's an all buy list. HDFC Life is a buy with a stop under 745. Tata Tech is a buying opportunity with a stop under 690. Hind Petro is a buy with a stop under 465. And finally, BPCL is a buy with a stop under 340. And quickly, markets don't go up every day, but they do go up when the trend is up.
Absolutely. Trend is your friend. That's the whole one, right? Sudarshan, thanks very much. Deepan, thanks very much for joining us, and talk to you in about 10 minutes with your calls. Okay, I meant Sudarshan and Mitesh. Deepan is with us. I mean to go back to Deepan. Deepan, thanks for staying on. So just a bunch of other things, right? Dr. Reddy's, I don't know if you saw the news on semaglutide. The bit of a setback, ADR was down 8%. Any thoughts here?
Yeah, I think that was going to be a growth driver for the company, and certainly disappointing numbers and disappointing event. And also the numbers, I think clearly North America market is slowing down for them. A lot of price erosion over there, reflected in the stock price and the P multiple as well. I think one investors should wait out this uncertain period. Within the pharma, I think the hottest segment to be in are the CDMO companies, and that's why I think we and a lot of investors are increasing their investment exposure.
This idea of Vodafone Indus Tower business, as I don't know if you saw, right? I mean, the written order came out, and seems like but there's still confusion. It's not settled whether the relief that they're seeking is only for that 9,500 crores or so. I mean, it's unlikely that that's going to be the case. At least that's what I would think, because the numbers are in tens of thousands of crores, the AGR dues. As an investor, I mean, stocks moved up from 6 to 10, closed at about 9.5 odd yesterday. What's the view, Deepan?
Prashant, I think that the government is actually throwing the kitchen sink at Vodafone, and they want to keep it alive, eventually kicking sometime in the future as well. And that's positive for shareholders. It attracts a great deal of trading interest. It's in the news all the time. And incrementally, news flow in the past few months have been very positive. So I think, it's like buying an option. You buy Vodafone at 10 rupees. At best, you will lose 10 rupees. But if everything falls in place for them, your stock price can double easily to 20 rupees in a matter of months. So that's the kind of play over here. You cannot, of course, invest big money into it because a lot of uncertainties around it. But I think that if it tends to survive and if some positive news flow comes like a merger with BSNL, or something, to ensure that it is going to remain and eventually start showing profits, then certainly the investor interest and the sentiment can improve. As I said, it's like buying an option.
No, yeah, absolutely. Deepan, and just put these stocks up, right? HDFC, AMC, Nippon India, Motilal Oswal, CAMS, K Fintech, 361, IIFL Capital, they were all down 5 to 10% yesterday. And we should just quickly look at where they're settling in the pre-open session. The biggest casualty yesterday. Deepan, just quick response here, and what would you do? We know the news, which is, of course, the SEBI draft on commissions, etc. Your thoughts?
No, Prashant, very disappointing, to kind of penalize an industry which has done human service to the country. I mean, the AMCs really have done a fabulous job in, channelizing savings into the market in a organized and a risk-free manner. In the past, always whenever there was a bull market, investors would come like it was the Wild West. And look what a fantastic service they have done. I think the industry and the mutual fund industry themselves have prevented a sharp decline in the rupee. I mean, no one thinks of it that way. They have absorbed all the FII flows, which otherwise would have caused a lot of damage. And now to say that because it is so successful, your commission rates will get cut, I don't agree with that kind of a thinking.
Okay. Well, that's a conversation we'll dive into perhaps later in more detail. But for the time being, thanks very much, Dipan, for being with us through the morning. And we'll catch you again soon. Okay, the pre-open session has kick-started. So where are things? 62 points lower on the Nifty as of now in terms of just very sharp result reactions. Watch out for United Breweries. That Manglam was explaining to us was a miss. Extended monsoon period, so not as much of consumption of beer as perhaps what one would have expected. So 4%, 4.5% on the lower side. Right now, let's address the power sector. We need to look at a couple of things. First is this report that seems to be indicating that the government is considering a $12 billion bailout plan to revive debt-ridden state power distribution companies. And then, of course, we want to get a sense of what the earnings season has in store for power companies as well. Nikhil Nigania, who tracks the space very, very closely at Bernstein, is with us. Nikhil, good morning. Thank you for joining in. So first, let's start with this. Now, bailouts to discoms are nothing new in this country. But I don't think we've heard about any, serious liquidity injection since 2020 or 2021, thereabouts. Now, we're not aware of the exact contours of the plan, but the headlines are suggesting that, again, some form of restructuring the debt, making it viable, and bringing in private sector participation, which we've seen successfully in many, many distribution companies already. What would your first thoughts be? And should this be any reason to look at, say, a CESC or a Tata Power in fresh light?
No, absolutely. So if you look at the government policy initiatives and this press article, so this press article came yesterday, and then there was the draft Electricity Act changes as well, and a Supreme Court order earlier as well. So you put these three together, there is a very clear direction that the government wants to increase private participation in distribution companies, number one. Number two, they want to bring in competition in power distribution. And number three, they want to improve profitability. They want tariffs to be reflective of cost at power distribution entities. So those are the direction steps the government is taking. To reach that, privatization is an excellent way. Reducing debt or restructuring the debt will be needed as well. So in terms of the beneficiaries of this, as you rightly mentioned, the existing private distribution companies would be the biggest ones, wherein you have four names in the listed space: Tata Power, CSC, Adani Energy, and Torrent Power. All of them have presence in different parts of the country, and they stand to gain the most as more discoms get privatized. Beyond them, the broader power sector also gains, as a healthy discom means more capex for the sector and more opportunities for generators as well.
Yeah.
The only negative... Yeah, sorry, go ahead, please.
No, go on, please.
The last bit I was making, the only negative bit we see is actually the lenders, PFC, REC. While we are positive on the names given the cheap valuations, their loan book could shrink if a part of the debt gets repaid.
Yeah, I was going to ask you whether that's another way to look at it. I was thinking maybe does it help them? But again, that's sovereign guarantee, right? I mean, there's for both REC and PFC, at least in terms of lending to these state discoms. You mentioned generators briefly there as well, I think. But this is all longer term, right? There's no immediate kind of impact because of this, even for the 4 companies that you mentioned.
No, absolutely. I mean, privatization and distribution has been tried for decades in this country. And at each step, you see pushback from the local stakeholders, from opposition parties. So it's going to take time. It's not an easy task.
So, Nikhil, just to close this point, and then we want to talk about, earnings expectations, etc., because otherwise power demand has been really weak this year, right? So, before we get to that bit, so far, the lessons that have been learned over the last decade of privatizing distribution companies, what sort of model, perhaps, an equity debt structure, or what is the model that has proven to be most successful, the kind of, IRRs involved? So when the next set of discoms comes up for privatization, what should be the key points that as investors people need to watch out for? And are all of these stocks, you mentioned Adani, Tata Power, CESC, and I'm forgetting the fourth one, would you expect, participation and interest from all 4? Or do you think, say, Tata Power is still stabilizing Odisha, so maybe they won't be as aggressive? So just any further nuance on this when the next round happens with any of these state discoms?
See, the model, government has tried multiple models, distribution licensee, distribution franchisee. The only places it has worked is where the management control and the largest stake is with the private entity. So 51% stake with the private entity and the balance with the state. That's the kind of model which works, where private entity is calling the shots in the discom and they're in the minority. And second part, in terms of differentiating across players, the only place where Tata Power stands out against the peers is they are the only ones who are running power distribution across the state of Odisha. Everyone else has done it only in cities, whether it's Mumbai, Calcutta, Delhi, or Ahmedabad. Tata Power is the only one, although we don't cover it, who's done it across the state and doing it well.
Okay, all right, great. Okay, now to the larger point, weak power demand. It's not something that we usually talk about, but maybe it's a monsoon thing. We just had 6 months of rains across the country this year, right? Are you expecting a pickup in the second half? And from the earnings perspective, which are the stocks that may have some, positive surprises? What should we keep our eye on in terms of stocks and pickup in demand in H2?
So power demand, you're right, it's been disappointing. We are blaming monsoons for everything, but here rightly so. A lot of rains means lower air conditioning load, etc. October data, what we have seen till now is again a bad print. It's printing at -4, -5% power demand growth YOY. So not encouraging. But on medium to long-term view is absolutely intact. Electrification is a global theme, and power demand should come to 1x of real GDP growth, which should be around 6% in the medium to long term. That's what we expect. Second half, yes, possibly better. Help of lower base of last year should help. But the weather needs to be supportive as well for that. On the second bit on impact on earnings, lower power demand and soft power prices impact merchant players the most, who have untied capacity. So where, for example, JSW Energy, Adani Green, Adani Power have substantial merchant capacities. The ones like NTPC, it's a regulated business. So the earnings shouldn't see an impact from lower power demand per se.
All right. It's we're talking about weather. It's still raining here in Mumbai, right? It's on November.
It's unbelievable. November rain is actually going to become a reality, right? At this rate.
Which also meant that the famous Mumbai October heat has not really panned out in its full force, which is good news. But
it's good news for power sector, good news for all of us. But I'm just worried about all those consumer discretionary companies, the durable companies who were already impacted by unseasonal rains this summer. And they were sitting on a fair amount of inventory, hoping for some sales to come by in the month of October. And now reports are suggesting that the winter would be much stronger than ever before. So maybe what they...
Manisha tells me it's El Nina.
La Nina.
La Nina.
El Nino is followed by La Nina. Gosh, I think these words are best left to Manisha.
It's a much harsher winter, apparently, North India and everywhere, actually, much colder. Nikhil, thank you very much for joining us and appreciate your time here on CNBC-TV18. Just market opening coming up right on cue. What do we have? First rates. Sensex is down about 0.25%, 84,870. And you got the Nifty, which is at about 26,028, 26,020, about a 0.25% lower, not quarter, but just under it. The Nifty Bank is down about 0.2%. The mid-cap index is slightly higher, so it's kind of quiet, sideways, no real direction, undecided. And market breadth, though, right out of the gates is better, but 2:1. Yesterday, again, I mean, we closed at 330 with 2:1 advances to decline ratio. So that's it. I mean, 60 points lower on the Nifty with about a minute or so into this open. What do we have in terms of where things are starting? Dr. Reddy's is on one end. We had that conversation with Deepan earlier, and L&T is in the green, and I think it's the top gainer on the Nifty. That's a heat map. I think about 35 odd names are lower and about 15 names are higher at this point. Surbi.
Okay, Dr. Reddy's is the casualty. Semaglutide, there seems to be a delay. And the street is not liking that. 5%. Remember, Ekta flagged this off and told us the ADR itself was down about 8%. Now the actual shares trading are down 5%. It's pulled down some other names with it. The Sun Pharma, which is also slightly lower. Cipla is slightly lower, 0.5% down. So Pharma is not off to a healthy start. What else? Bharti Airtel is down 1.5%. Let me actually pull out Vodafone and see what's happening at Vodafone. Yep, it's taken a knock because the Supreme Court physical judgment, the actual judgment now that it's been uploaded, it's made it clear that the scope of that relief is just to the additional AGR demand, which is all of some 9,500 odd crores. It doesn't apply to the entire 80,000 crore rupee issue. At least that's what it appears to be. Okay, back to the Nifty. What else is lower this morning? ITC, Tata Steel, Apollo Hospitals, Tata Consumer, Cipla, ONGC. It's actually a cross-section of stocks. Reliance is also pulling its weight on the downside. The only real green is L&T. And remember, we flagged this off. I mean, what they're talking about in terms of the order intake and company calling it out, saying private sector capex in India finally seems to be beginning. Steady margins and execution is fine. Top line is a bit of a miss, but that's okay. It was monsoons. And the market's definitely reading this as a positive. Big winner of the morning, Mangalam.
Yeah, I take your point indeed. You know, on L&T, big winner of the morning, but a lot of losers today. If you look at from the broader markets, obviously Vodafone Idea because the limited relief that would come by, and as a result of which we're seeing some decline in Indus Towers as well. And on the way up, PB Fintech on the back of numbers. But the casualty of the morning, definitely two of them. Shelley Engineering down about 15%. Remember, these are, Ekta tells us that Shelley Engineering is the one that supplies semaglutide or had a tie-up to supply semaglutide to Dr. Reddy's. So Dr. Reddy's falling has led to a bigger fall in Shelley Engineering, down 15% straight off the, blocks. Latravenues Tech, remember, is a company which had a strong investor come by during this quarter, but at the same time, the performance wasn't very good. They reported an EBITDA loss versus a gain same time last year, and that stock down about 12.5% as well, pummeled in trade. We have United Breweries down 4% on the back of, performance not being as per street expectations. But on the way up, we have VST Industries, where the margins did see a bit of expansion. So a lot of these moves are mostly news-led, result-led, or in some cases, like Latravenues Tech, or rather like Shelley Engineering. It has to be, because of Dr. Reddy's, the other impact of the second-order impact that has happened on Shelley Engineering.
The big so yeah, I mean, Shelley Engineering, of course, it's in the fill-finish business, and with regards to the semaglutide GLP-1 opportunity, and that's taking a large cut, actually. I look at the volumes at about 14,000 shares, but there you go. The number one volume-led gainer on the NSE is Sagility. It's up 9%. $55. It's got very large volumes already, some 45 million shares on it as so far. Policy Bazaar is number two with the biggest volume-led gainer, 3% here. 5-star continues its 5-star performance last 2 days, yesterday and today. I mean, this is, of course, also on the back of numbers which came through. I mean, I think today is Thursday, which means Tuesday's close was 540. It's moved up 100 rupees since then. NetWeb, had a flip-flop, 6% day before, 6% yesterday, up and down. So didn't go anywhere, and it's up 2%, but it's got very large volumes for now. Suzlon, I think, has appointed a new CFO, 1% here. Aether Energy is up about 1%. GM Breweries, the volumes start to fade off very quickly beyond what I mentioned in terms of just price action. And on the downside, Bharti is down about 1.5% as well. Blue Dot had this massive 20% candle yesterday. It's down about 3% right now. And Ixigo has had a phenomenal year. It closed last year, it's just second year of listing. It closed last year at 170, and it made a high of about 340 this year. And they're about 274 as we speak. So that's the overall picture with things starting out. Lots of other stuff coming into the mix, and we'll address it. Indus Tower, for example, right? Idea, Vodafone, Bharti is down. Indus Tower is down 3%. There is UBL, that is United Breweries, the beer company, down 3%. EPAC Durables is down 3%, but again had a very large moves recently. Kalamandir, that is Sai Silk, had a big move, I think day before yesterday, down about 1.5%. And look at Varun Beverages maybe as well. That was the big mover from yesterday and was up 10%, is down about... Varun should come up. It's a third of a percent higher after yesterday's 10% move. Manish Sonthalia is with us, Chief Investment Officer at MK and MK Investment Managers. Manish, good morning. Great to have you with us here. Thanks very much for joining us. I just want to start with PSUs as a theme, Manish. What do you own in PSUs, if you own any, segment-wise? Because earnings are starting to pick up a little bit. And maybe, the least loved area is the oil marketing companies. We were having this conversation with a guest earlier, and he put it well. The government's starting to explain the story here much better in terms of what's the fixed asset base, what these companies trade at, etc., etc. Go on.
Yeah, so, the nifty PSC index is almost at, 1 year highs and almost at all-time highs, if I'm not mistaken. But what we own out here are power utilities. We own logistic majors like Container Corporation. We have Power Grid. We have the power financing companies, the power finance corporations. We have the mortgage housing finance company, the largest. I mean, the key thesis out here is that valuation vis-a-vis growth is conducive. And, you may argue that PSUs will always trade at lower valuations, but how much lower valuation is the key point? And the rest of the market is trading at whatever valuation they're trading at. The discount to the private sector, cannot be that big, is the whole argument. And the whole thesis has actually played out over the last 1 year. The Nifty PSC index has done well, and our stocks also continue to do well. As regards the oil marketing companies, look, I mean, there's no way to predict, the earnings on a yearly basis because of the volatility of crude prices. And the best way to value them is on a price to book. Because if you can't predict earnings, actually it's futile to actually value these companies on price to earnings. And so price to book. And even out there is a lot of comfort. And, these stocks also have got re-rated, plus the dividend yields obviously plays out quite well. So, the story is now being well articulated by the GOI as far as the oil marketing companies. Again, they have got re-rated. They have immense potential even from here. But that's how to go about it.
Okay. By the way, I was looking at some more details on a couple of these sharp result reactions. Ixigo, there is a ESOP expense of 26 crores. That's what they've called out. And they're saying that X of this, it would have been a better performance. Actually, it's at almost 27 crores.
In fact, I was just looking at their cash flow from operations. That's actually increased year on year. And at the same time, we've seen an improvement across all their segments as well. So the revenues tech comes up for you right now. Flight business has shown a strong growth. That has been a growth driver for the company going forward. The margins out there are fairly strong as well. Train, obviously, they have the highest market share outside of IRCTC when it comes to trains out there too. The margins have been fairly steady. The bus business has been growing. So business per se has been growing. I think it's just that ESOP cost and at the same time below the operating cash flow sort of numbers that are impacting them. In fact, from March to now, even their cash has, the balance of cash has increased by quite a bit. If I'm looking at their overall numbers here, the cash balance was close to 52 crores at the end of March. And right now, that number is close to 129 crores.
Yeah, that's what I was completely baffled, saying for the amount of traveling that's happening and the kind of bookings that are happening even on Ixigo, and just the increasing number of users, how can they do an EBITDA loss? So that makes it clear that the business seems to be, chugging along at a fine clip. It is that exceptional item and the ESOP expense which has pulled down the results. Anyway, since we're talking results, let's take this up with Manish as well. Manish, good morning. Great to have you in. I want to talk about how you'd read through the commentary that came in from L&T. I don't know if you had a chance to look at some of the headlines, but it's really heartening. The order intake, not just for this quarter, I think it's up some 50%, this quarter. they have indicated that in all probability, they'll be exceeding their full-year order intake guidance of 15% as well. They're saying they're seeing some signs of a pickup in private capex. That sounds amazing. Sounds like music to the ears. Would you believe it to be durable? And if yes, then what bearing can that have or should that have on portfolio stock selection?
Well, I think biggest commentary from them was basically exiting the Hyderabad metro. I mean, that is a big problem for the company, for quite a few number of years. And they're getting into EMS manufacturing. That actually is the big mover and shaker out there. I think apart from the order book position, which has been at record highs for them, execution has come out well. They're slightly disappointed on the margins front, came in at 10%, but that's okay. And valuations are pretty conducive from that point of view. Government capex is continuing thick and fast. That's perfectly fine. And now their commentary about private capex should help at the margin in terms of the risk is to reward for L&T. So from that point of view, I thought numbers were pretty decent. We won the stock. Okay, so
Just to extend that point, I mean, for every fresh 100 rupees, say that, you have to invest. Okay, before I ask that question, I think the meeting has ended and the two tall leaders of the world have stepped out. And I think it's...
As Mangalam points out, 5'11 and 6'3".
6'3". Just in case you're joining us late and you're wondering what we're talking about, we had a bit of a debate at the start of the show on the height of these two gentlemen. They're both exceedingly tall figures at the world stage. And perhaps literally as well.
Literally and figuratively, and the GDP.
Maybe, guys, let's just turn up the audio if we can. Let's. I don't know if I think there will be. Okay, there is no audio.
Just visuals, yeah.
Yeah. I'm not. So they're parting ways.
Are they smiling?
They're parting ways.
Mr. Trump is walking away very, very quickly from that frame.
We'll know shortly, I think. Just stay tuned to social media posts of Donald Trump.
Back in the day when this should be IT results, right?
Yeah.
There used to be a lot of focus and discussion on body language.
Right.
Yeah.
Body language, whether this...
There still is a lot of discussion, body language, where people are positioned, how they stand, which table of, which side of the table are people sitting on, etc. That's a different science altogether. But for now...
Are they wondering whether they're going to the same place? Is there a press... We don't know, right? I mean, are they sort of heading back?
For now, what we know is that Xi Jinping's cavalcade has moved, and it's moved fast. While
no, I'm just saying, is there going to be a joint press conference, statement, or what? We'll have to just see, but because we don't know whether there is any of that. But yeah, I mean, these are. I mean, it's the first meeting in 6 years between the two leaders, personally, and I assume there will be a statement at least, if not more, from both sides. Maybe not from the presidents themselves, but maybe their underlings. Will want to talk and sort of communicate to the world what exactly has been agreed upon, etc. But I think President Xi's cavalcade has moved on. President Trump's is still there, and we will see.
We don't see the underlings together either. We saw President Trump and Xi. They came. They parted.
No, they were there.
No, the underlings were not together. That looks like.
That's Marco Rubio.
Exactly. Yeah.
There's
the Chinese
Howard Lutnick. There's Scott Bessent somewhere there. And yeah, there you go. So
the two sides have parted ways. Now we need to understand if it is a final parting or whether there's going to be a recongregation and then a great joint statement or a joint press conference of sorts. No clarity on this, at least as yet.
This really sounds like sports commentary out here. We're just trying to figure out what.
Let's go to Manish, Mangalam. Let's go to
Manish. Actually, that's the best. Manish, we got those visuals, and this is something that none of us can actually predict what will happen at what point in time, and what happens as well is unfortunately not usually permanent. So, be that as it may, all those things which are moving around, let's talk about the things that are more important here. Earnings season so far hasn't been as bad as the street was fearing, and the belief is that maybe the second half of this year we see earnings actually pick up because of all the GST related issues, and all those triggers that have come by. So what's your expectation for earnings in the second half of this year, and which sectors according to you, will lead them? Where should one bet?
Yeah, so second half earnings obviously is likely to be better than the first half on the back of lower inflation, GST cut, better spending and all of that. So previously we were building in 10%, now basically 13%, 13.5% sort of full year EPS growth for FY26 is what we are working at. Obviously, discretionary consumption looks much better placed currently. And we've seen the festive season demand pick up. Auto sales numbers are speaking for themselves. And I think out here, in the case of discretionary consumption, the premium segment seems somewhat better placed. And there is an premiumization story playing out in the discretionary consumption. Demand looks more stable and predictable. So I think the premium end of consumption is what should do well in terms of stock performance. Banks, obviously, of course, we believe that, taking away the rate cuts, if that happens, then maybe the margins pressure won't go away. But if there is no rate cut further, then margins for banks should start to pick up from the third and the fourth quarter. Credit growth is likely to be better. BFSI looks good. And even on the insurance side, I think some of the numbers and the GST cuts and the penetration story, etc., would start to bode well. So BFSI as a space, discretionary consumption as a space, apart from the normal capital market related themes, selectively hospitals and hotels. Of course, those are part of the consumption story. These look quite good from near-term standpoint. So Q3 and Q4. Somewhat apathetic to the large and highly valued stocks, EMS, power, renewables. Of course, there the valuation discomfort is obviously there.
What do you make of the IPO, space right now? A lot of the issues coming in, a lot of conversations around the growth prospects of these businesses, valuations. Some people calling it astronomical, some people calling it the underlying TAM fairly being good. Where do you stand on these?
Again, the problem is valuations. I mean, just can't put my handle on valuations on a majority of these IPOs. These are great companies, good companies, but given the size of the total addressable market and, 20-25% sort of a growth, you're wanting a valuation of 230 times. I mean, this is just not palatable, according to me. These may be great businesses, but at the end of the day, you got to make money. Pine Labs looks somewhat okay, according to me, provided they come out with some sort of a palatable valuation in the ballpark of 30,000 crore or below market cap, because the projected numbers, according to me, for the next 3 years look somewhat okay compared to listed peers that we have. There could be some scope of making money out there if the valuations were to be below 30,000 or in that ballpark. Rest of them, the growth vis-a-vis valuation, just don't look that great. These may be great platform businesses, but in the garb of new age tech companies, I mean, we just can't pay anything.
Yeah, everybody calls themselves a tech company these days. No matter what you do, everybody is a tech company. I remember, I think in Manglam's conversation, that's a term Lenskart used for itself, that they're a technology play. Everything is tech these days. Shoes, eyewear, I'm sure pizza, pasta, everything is tech, right? That's just the world that we live in.
That's something, even the Domino's global CEO had once said that we're not a pizza company, we're actually a tech company which delivers pizza. And that actually made sense as well because of the number of app downloads that Domino's had and the technology that went behind them actually delivering those pizzas. It was more like a tech company than a pizza company.
I have a fundamental problem with that. You got to have the pizza right. Yeah. And then the technology and the delivery comes part of it. But you've got to get your pizza right. Applies to everything else, that you're doing your core business right. But anyway, that debate aside, I just want to come to the financials once again. Manish, now these deal-bound banks, RBL and Federal specifically, I'll throw in maybe a Yes Bank as well. So if the deals go through, there's going to be a change. There's going to be, a foreign perhaps player coming on the board, if not taking over, control in the case of RBL. Now, how should we read through in terms of just, share prices and what this could mean? Do you think it could mean a more durable re-rating? Because, for instance, Federal and RBL are already at very close to all-time highs, right? These stocks. So as an investor, should one focus on them, play it for the long run, or are you just better off in larger banks which are doing really well? I mean, like the likes of ICICI, etc.
Well, I would call them high beta mid-cap banks. The names that you alluded to. But at the end of the day, from a medium-term perspective, it all boils down to earnings and what valuations are likely to pay. Some of these deal-bound banks, I mean, the numbers are not going to change in a hurry for the better, because banking is a tough business, and just because you throw in a lot of capital inside a bank, you will reform, processes, etc., will get mended, and all of that is likely to play out, but it's going to play out over a period of time. So if let's say the capital infusion in RBL Bank happens at, let's say, 280 rupees, the existing price to book previous to the deal was 250 rupees. I mean, everything said and done, what are we looking at? FY27 numbers, then you could at best pay, let's say, 1.2 times price to book. You're almost there. So what happens for the next 2 years? So I think the proof of the pudding lies in the, how the numbers play out over the next 2 years, and then it is basically valuation, except for a federal bank, which looks more of a structural story, and this is the stock that we own. The rest of them, we are still evaluating whether there is still money on the table. But near term, it's all about the high beta, news driven. That's basically played out in some of these.
All right. Manish, thanks very much for joining us. Good speaking with you. Appreciate your time here on CNBC-TV18. Well, let's just bring in our second management for the day. Sagility is the company in focus. Ramesh Gopalan is Managing Director and Group CEO of the company. By the way, the stock is one of the big gainers today. It's the number one volume-led gainer on the NSE. I think about 55. Three things we'll talk about with Sagility. So is the EBITDA margin expansion sustainable? As question number one, literally, will H2 FY26 growth be better than the first half? And finally, synergies from the Broadpath acquisition. Thanks once again for joining us on the program to talk about the numbers, Mr. Gopalan. In the first quarter, Mr. Gopalan, you maintained a 20% revenue growth guidance for FY26, including Broadpath. Given the strong first half performance, are you likely, do you want to revise that number upwards, or will you stick with 20%? And also, second part, once you've answered the first bit, any impact on client spending or project timelines in the near term because of all these uncertainties, especially in the US?
Thank you. Thank you for having me on your show. Yes, we did revise our guidance in the earnings call last evening, right? So given the strong momentum that we are seeing, we think we will do a constant currency growth of 21% or more. The first half has been very strong for us, and we continue to see that momentum into the second half as well. On your question on the market, yes, the marketplace is changing. There's a lot of turbulence in the market, but then the core value proposition that we take to clients is one of cost takeout and help them improve their profitability. So that's exactly what clients are looking for. And so as our clients go through their profitability pressures, companies like us can do a lot to help them. And that's what gives us the confidence that the second half will continue to be as robust as the first half.
Mr. Gopalan, hi, sir. Your margin, EBITDA margin, I think has come to now almost 25%, right? At the end of this quarter, which is remarkable. What specifically is driving the margin? And is it some seasonal factor, or one-off factor, or maybe one deal win? Or is it more sustainable and more structural in nature?
See, our EBITDA margins were always high. We were doing anywhere between 24 and 25 even in the past. When we acquired Broadpath, Broadpath had a much lower margin profile than us. And so we had given a guidance towards lower EBITDA numbers for FY26. However, our operations have been pretty robust. Main reason is, as we are using technology to transform operations, a large part of those benefits go to our clients, but that could be accretive to our margins as well. So it's a question of how we deploy these efficiency levers and how much do we pass on to clients and how much we can retain for ourselves. So the slight uptick in the margins that you're seeing is essentially coming from strong operations and use of technology to transform client operations. And do you expect this to get better in the second half? Where do you see exit margins by the end of the year? See, we had guided to around 24% at the start of the year. After the first quarter, we said we'd be north of 24. Right now, we are guiding to a 25% margin for the full year. So second half will be similar to the first half. Look, ours is a seasonal business. So Q3 has seasonality, and a large part of these execution comes from the US, which is at a lower margin profile than other geographies. So it'll kind of even out. But for the full year, we are guiding to more of the same 25% EBITDA margins.
Right. If you could give us a sense further on the kind of investments that you'll be making in AI and any sort of M&A plans that you have, any gaps which you believe that can be filled through M&A, anything that you're talking about?
Constantly, we are evaluating opportunities on the M&A side, right? So as we've said before, for us, M&A achieves or M&A is expected to achieve two objectives. One, how do we grow our capabilities? We have a lot of domain expertise. We are investing organically in technology. But there are obviously areas where if you find an attractive target which can give us that quick build of capability, we would be interested. And the other objective of M&A is to increase our market access. As we've stated in the past, expanding into the mid-market and the small market has been a stated objective of ours. And so BroadPath, for instance, we acquired BroadPath because it gave us access to a large number of clients in the mid and small space. If we find other similar opportunities, we would be interested in doing. So we are constantly on the lookout, but subject to valuations that meet our criteria, we'd be happy to do an M&A.
The promoters were looking to pare their stake. They had pared their stake as well from, 82% to close to around 67%. The OFS that came in at around for 15%. Is there more or is that done for now?
Look, I can't speak on behalf of the promoters. So yeah, like you said, promoters still own 67%. So how and when they dilute their stake is entirely up to them. So I can't comment on the time frame.
But is something on the cards?
Not that I know of.
Okay. Mr. Gopalan, the proposed or the attempts to reform US healthcare and is going in lots of different directions under the not so new health secretary. Is that going to is there any strain there which impacts your business in the shape and form it's being proposed?
You're right. I mean, there's lots of changes happening. As you know, the one big beautiful bill had a lot of implications towards some segments of the healthcare business like Medicaid. So there are lots of puts and takes, but our value proposition, like I said, is to help improve efficiency of healthcare operations. And so all of these changes at some level are impacting our clients. And the focus for them is to how to reduce cost and how to improve the profitability. And that's where we play a big role. So while you're right in the sense all of these changes will have impacts in terms of membership growth in some areas, membership drops in other areas, we got to be nimble. We got to be willing to work with our clients to help them improve their profitability. And our strength also is our portfolio of services is quite broad. So we help clients in all facets of operations. And so depending on what the specific need of the client is, we have the expertise and we have relevant solutions that we can take to our clients.
And in the same breath, Mr. Gopalan, I don't know how much work you're actually doing on site. Just tell us that. I mean, actual feet on the street in the US, what sort of a presence do you have right now? Because on a daily basis, we wake up to news where either visas or this morning it's all about work permits, right? So that automatic renewal of work permits, that ends from tomorrow. So you have to, apply for reauthorization. The whole documentation has to go through again. So it seems to be getting increasingly difficult to have a seamless, smooth sailing if you're operating in the US. Your thoughts on this?
Look, we operate like a true global company, right? So most of our employees in every geography that we operate are local citizens. And that's true of the US as well. Over 99% of our employees in the US are either citizens or green card holders. So we don't rely on visas. And it's, like I said, less than 1%. So none of these regulations have any direct impact on us. And we have a sizable presence in the US. And US is a very important delivery geography for us because some of the work that we do cannot be offshored through regulation. So we have to deliver that in the US for our clients. And so we continue to look at US as a growth geography. And like I said, none of these visa-related regulations will have any impact on us.
Take that point. Thank you so much for joining in, sir, and giving us an outlook into your business. Good luck once again. The street likes those numbers. More importantly, the upped guidance as well. With that, let's give a quick note to our viewers. As you can see on the screen, there is that Money Control stock score, which is just above the line graph. This is a score assigned to each stock based on Money Control's multi-factor algorithm. It's calculated by analyzing over 40 parameters, which include both current and historical financial statements, price charts, and technical indicators for each stock. Each of the individual parameters are considered for calculation of the 4 factors, which are then assigned a score, which is then aggregated to arrive at an overall Q factor, G factor, V factor, and T factor score. Remember, this is not a buy or sell recommendation. Any investor or viewer is advised to carry out necessary diligence on their own through a certified registered financial advisor for investment decisions. Right, with that, let's move on. Let's get in another management. Radhiko Khaitan is the next management on our show. Reported a strong set of numbers. Change in route to market in Andhra Pradesh contributed to the regular volume growth as well, even as Prestige and above continued to do well. We have Abhishek Khaitan, who's the managing director at Radhiko Khaitan, joining in. Abhishek, thank you so much for joining in. The last time we spoke, you said that the second quarter has been as good as the first quarter, and that's what the numbers have been, saying as well. Could you now give us a sense of expected growth in the second half? Because on the one hand, it's seasonally strong, but on the other, you also have a higher base.
See, as you see, our second quarter has been the strongest quarter of Radhiko so far in terms of revenue. The volumes, we have recorded the largest ever, which is our turnover was 1493 crores and volume 9.34 million cases, which is a growth of 38%. Our EBITDA also grew by 45% to 236 crores, and we registered the highest ever net profit of 138 crores, which is a 69% jump. Now, going forward, we are seeing a good traction, but the base is large. And for the entire year, we feel that the volume minimum should be more than 20% plus. So I think we are seeing good traction in the coming months also. And most importantly, the premiumization strategy of the company is working. And last quarter also, we grew by 21%, 22% in the P&A segment. Yeah. So we expect it to continue in the current fiscal, the similar growth.
Right, but 20% plus is an understatement, right? Because the first half you've grown volumes over 35%. So you obviously will grow 20% for the full year. How much more than 20% is the question?
See, our total volume in the first half has been up by 37.5% because we take the total volume, including the royalty volumes. And so I think, as a guidance, I think we should be far above 20% in volumes for sure.
All right, far above 20%, yes. And how much in P&A?
P&A also 20% plus.
P&A also 20% plus.
Yeah. Also, if you see, the most encouraging part, Royal Ranthambore, which is the only Indian whiskey to be priced higher than the bottle in India, Scotch. We have grown more than 67% for the first half. And we got listed in the armed forces. And there in the month of September, we have achieved a market share of 10%. Also, the category After Dark, we did 1.9 million cases last year. And this year, in the first half, we are already up by 100% in volumes. So, and also we've launched 2 new brands. One is the Spirit of Kashmir, which is a luxury vodka, and Morpheus whiskey, which is priced at about 1,200 rupees a bottle and is one of the largest profit pool segment for the liquor industry. So I think with all these coming, I think 20% plus premium growth looks quite visible to us. And also one thing has happened is even the little bit of tailwinds are coming where we are seeing little softening in the commodity cycle and the grain prices in the coming quarters.
Mr. Khaitan, first of all, compliments to you for redefining Indian presence in some of the most prominent, alcobev segments. And perhaps you'll do that with vodka as well, with the Spirit of Kashmir. So good luck to you for that. Speaking of this, I mean, you mentioned your prestige and above segment is also going to grow at 20% plus. Now, you had earlier indicated that you wanted the luxury and the semi-luxury portfolio to touch 500 crores this year. And you said that it's going to be almost a quarter of your sales over the next couple of years. So where are you on these targets?
See, to answer about the luxury first, I think all our luxury portfolio is getting very well accepted in the market, starting from Rampur. Jaisalmer is showing a lot of traction. And Royal Ranthambore, as I said, we have grown by 67%. We've introduced now the Spirit of Kashmir. Also, very soon we'll be coming with our own single malt. Sangam, which we had launched, is also gradually growing. So I think we are well set to touch the 500 crore mark, which last year was 350 crores. So I think we are quite well positioned to achieve that figure. As far as the margin goes, is 13.8 was our margin last year. And this quarter, our margin has increased by 200 basis points to 15.8. So I think in the current year, we should easily achieve 150 basis points. And I think for the next 2 years, our target is to increase at least by 125 basis points year on year. So I think we are well on the path of getting into the high teens.
Okay. Just checking, could there be some moderation in volume growth in the second half because of everything that's been going in Andhra? And can the route to market change perhaps already be in the base because of the the Andhra issue? Will the second half be softer?
See, that's why we said that our guidance is 20%, easily 20% plus. So definitely it won't be in this range, but it will be still high.
All right. Obviously not 38%, but definitely about 20%. But, you're entering all these luxury categories, single malt, grain, etc., luxury vodkas. The one category that has been fast growing, and at least in the premium end, is the tequila category, agave, tequila, whatever you call it. Are you looking to enter that category as well?
We've had a joint venture called Devil Spirits, where Radico is 47.5%. And SRK and Associates are 47.5%, and Nikhil Kamath is 5%. So, as I said earlier, also very soon we'll be launching our first brand out of that portfolio is the tequila, which will be an anejo, and it should be priced in the range of about 28,000 to 30,000 rupees a bottle.
Wow, a tequila with SRK and Nitin Kamath and 28 to 30,000 rupees a bottle.
I'll rely on maybe Prashant to give us qualitative feedback beyond this category. I'm not qualified.
Thank you very much for joining us, sir. Really appreciate your time. And Mangalam, for a teetotaler, you know an awful lot about alcohol. Huh?
Because if you're not drinking, you're reading. If you're not drinking, you're reading the packaging and you're looking at what is being sold.
By the way, tequila is good. Tequilas are... they don't come cheap. They are quite
no, they
nice.
don't.
So
I was hoping Radico will be something for the ordinary citizen, but at 30,000 for a bottle, wow.
All right, we'll take a quick commercial break here. We've got the telecom discussion lined up next, right? So Balaji Subramaniam of IIFL Capital Services, Sanjay Asher of Crawford Bailey and Company to talk to us about the Supreme Court's written order on the Vodafone Idea's AGR dues issue. Idea is down 6.5%, Indus Tower is down 3%, Bharti is lower. So what's going on? How should one read this? Stay tuned.
Welcome back. Quick glance at the screen before we move to our next conversation. And there is a bit of a cool-off that's in the works right now, 25,900. a cut of about 150 points this morning. Okay, the next big story that we are tracking is the latest understanding on the Supreme Court's order in the Vodafone Idea adjusted gross revenue case. Now, the actual court order has triggered a fresh debate over the extent of relief that the government can consider for the telecom operators, because the court order seems to be indicating that the scope of relief will be limited to the additional AGR demand, which was less than 10,000 crores, whereas the overall dues, go up to 80,000 crores plus. We have with us Balaji Subramaniam, Vice President at IIFL Capital Services, and Sanjay Ashar, Senior Partner at Crawford, Bailey and Company. Gentlemen, thank you very much for joining in. Mr. Ashar, if I could come to you first, I don't know if you had the chance to glance through what the actual judgment is saying. But if the court's argument is that the original prayer was only about the additional AGR demand, which was around 9,800 odd crores. So then, now that the government has allowed, the court has allowed the government to have a relook at the matter, is it going to be limited to just that, the additional AGR demand?
Yes, it's just the additional AGR demand up to 2016-17. Whatever that year is there mentioned in the agreement, because in the order, and the order says that is what has been prayed by Vodafone.
So that means that the government, if you read through and interpret the judgment as it stands right now, it means that the earlier assumption that the government has a full free hand to now, look at the case, with a fresh pair of eyes. The argument was that the government itself has become, a very significant shareholder. That doesn't hold then it doesn't seem to be that big a relief.
Absolutely, it doesn't hold that.
So Balaji, comment on this. If that's the interpretation, then what? And it's playing out, right? We're seeing the Vodafone stock today. In fact, there was some argument whether Bharti can also seek some relief, arguing that AGR affects Bharti as well. So don't limit it to one telecom company. So now what? We're back to square one?
Good morning. Thanks for having me on the show. If you look at the order that the Supreme Court uploaded last evening, I think it's a little ambiguous, to be honest, as in neither does it clearly say that the government has a free hand as far as the larger AGR case of 80,000 crore dues is concerned, nor does it kind of explicitly dismiss that point number 6, which says that this will be limited to the additional AGR demand, whether, that is the statement of fact merely, or does that mean that the earlier clauses which mentioned about giving flexibility to the government, whether the point number 6 qualifies the earlier set of points, that is not very clear. But my reading of the situation is that since the order itself leaves a lot of room for interpretation, I would expect the government to probably seek additional clarification from the Supreme Court before they take any concrete action. So I think based on what transpired a couple of days back, the expectation was that the government would have had a free hand, and there could be relief to Vodafone Idea either in the terms of either in NPV terms or in terms of the payment timeline. Now I think all that probably needs more clarity to come. So to that extent, I think any release rally or any expectation of a clarity emerging would probably now take a back seat, and we have to see how the government proceeds going ahead.
Such a crazy story, right? I mean, first that big order. I mean, Vodafone Idea, even if anything, if this were to go completely their way, I mean, this is in any case, they were supposed to be a survivor. I mean, share price separately. Others have moved way past, right?
Yeah.
So they were the third player, but not a strong player. Now even that is in question in terms of how this will go. If you were a betting man, Balaji, an unfair question, but what would you say? Is there room here or no?
I think it's a very tricky question, and if I would see, the way I look at it is that the stock meaningfully moved up. It almost moved up by 50% from where it was in maybe late August, early September. in anticipation of some relief coming through. So now we are seeing, some of that rally getting, unwound in the last 2-3 days. So I think fundamentally there are still challenges for the company, even if we assume that there is a meaningful relief on the AGR front, because let us not forget that Vodafone Idea also has a 1.2 lakh crores of spectrum dues, and which is basically almost 60% of their overall debt on books. So even if the AGR relief comes into play, you have the spectrum debt, on which there is again a bit of, limited flexibility for the government, because let us not forget that a lot of this debt pertains to spectrum that will expire in 2034, 2035. So even if you give a moratorium, at some point in time, the company will have to pay this up. And it also assumes that at some point, Vodafone Idea arrests its subscriber losses and it sees a massive ARPU increase. So I think, there are too many hurdles that the company has got to clear before it becomes a competitive, strong third player.
Do you see it able to raise debt? Because that debt raising was seen as the most critical requirement for its survival as a going concern. Will they be able to raise the money, Balaji?
Now with this, uncertainty, the fresh round of uncertainty after last evening's order that got uploaded, I think the lenders would seek clarity, before they cut the check.
Okay. So very quickly, Mr. Asher, just to come in on this. Now, the consistent argument that Vodafone has been making is that there are errors in computation of this whole AGR liability. Now, I don't know if they can use that to try and seek relief beyond just the scope of this additional AGR, because they're saying there's error in computing, in the additional AGR, in the AGR, in the penalty, all of that. Could that be some argument of some sort that holds?
Very much. Of course, that will hold, that argument will certainly hold water, and surely they can agitate on it, and they can request the government to relook at the calculation. And in case that calculation is still, in view of Vodafone, not the correct calculation, they can again start a new legal battle in order to seek clarification or seek relief on the calculation of the AGR computation as well.
Wow. How many cases can you file on arguing that the calculation is not right? That 2 plus 2 is becoming 5, or maybe 5.5, or maybe 7.
No, but the point,
all different cases.
No, it was highly unusual in the first place, the Supreme Court to circumvent its own order of 2020. That it happened, and we all kind of believed it and it was going to happen. Now there is this googly. So there's no way to tell, right? And if you're, just look at Vodafone Idea today. You thought, well, slowly the government is going to come in and, they have full flexibility, and today slam dunk, down 10%. So this is an absolutely crazy kind of story. But thanks very much, Balaji and Sanjay, for joining us as we continue to sort of track this as we go along. Appreciate it very much here. Well, 140 odd points lower is what you have on the Nifty, 25,920. What we'll do is take a break. We're back with Manisha on the other side and commodities in focus when we return.
Welcome back. It is time to talk commodities. We have Manisha joining in, and today she's figuring out what this high-profile Trump-Shea meeting has meant for commodities. Is there some kind of a segue over here? By the way, there's some statements coming in. Purchase of soybean by China will start immediately, on cue. Manisha.
But my graphics have crude oil first and then soybean, so I'm going to take it like that there. But soybean absolutely is in focus right now because it's a big agriculture commodity therein. But as I said, crude oil prices first, and we've seen prices decline 2.5% on month, and it's down by 16% for 2025 till time. When you look at the crude oil prices, well, this is the third straight month where you are looking at a decline continuing for the prices there. It also is, by the way, a third yearly decline that we are seeing in 2025. The last couple of years also have seen declines come in for the crude oil prices. Interestingly, while the markets are reacting to the U.S. Fed statement where December rate cut is not a foregone conclusion, is what we are dealing with right now. It's not so positive for many of those commodities. But for the crude oil prices, what it is also watching out for is on the conversation between U.S. and China and whether or not the U.S. will push China in sense of energy demand there, and whether we do see an agreement come in from there, whether U.S. tells China to not buy so much of Russian oil. So those statements is something that the street is waiting for right now, and is the reason you have seen a very, very jittery crude oil prices moving there. Apart from that, it also is going to be about the OPEC Plus meeting, which is on 2nd of November, where they will talk about the monthly quota for the month of December, and an expectation, as OPEC has been saying, that they can increase production in case Russian sanctions do work out and you see a supply disruption there. So plenty happening in the international markets in sense of headlines for the crude prices there. But now let's talk about soybean, because that seems to be making a lot of headlines right now. So let me take you through the numbers therein. If you look at the soybean futures in the international markets, well, they are trading at a 15-month highs right now. Last 1 week have seen prices gain up by 4% itself. And when you look at the month of October, we have seen the soybean prices gain up by 7% therein. Now, the investors are optimistic about the U.S. and China trade deal. We already are looking at those statements coming in from the U.S. president there. And then what we also have seen in the last 24 hours is a statement coming from China itself, which says that they have bought or started to buy first 3 cargoes of soybean from U.S. therein, and these are a total of 180,000 tons. I mean, that's a very, very small number to begin with. And also remember, the U.S. harvest is almost done with, but the U.S. crop size itself is quite big. So 180,000 tons perhaps is just 1% of what China buys, which is not so strong in sense of number. Now, this is a strong number. The U.S. soybean crop is 118 million tons. China's only bought 180,000 tons, so it doesn't really stand anywhere at all. Interestingly now, China does buy, and it's the major buyer in the global markets when it comes to soybeans. So total Chinese soybean purchases per annum are 80 to 90 million tons. They do buy a lot from US to the tune of 20 to 22 million tons, by the way. But this harvest, they haven't bought anything. And 180,000 tons really isn't such a great number, as I keep telling you that. Now, when you look at overall Chinese buying that we have seen, 80% of the US soybean has been harvested. It also is about China buying nearly 77% of what Brazil has exported this time around. And even as we're looking at September-October numbers quite strong, and they're, by the way, higher by 50 to 60% as compared to last year. So China basically seems to be buying soybeans from Argentina, from Brazil, etc., and not from US. But if there is this conversation that goes on strong, and as the US president says, then the overall international markets perhaps would change. Remember, the soybean and dairy and corn are a couple of factors that US has been discussing with India as well. India does import 60% of its edible oil requirements, and US has been pushing that on as well. The only point of contention here is the genetically modified, because what US does more of its soybean and corn is GM crops, which India does not buy or grow at this point in time. But with China buying that is a big support continuing for the soybean prices in days to come.
All right. Well, Manisha, thank you very much for that. Well, it's China, which is very much in news, and there are flashes at the bottom of the screen coming in from President Trump talking about agreement on rare earths, saying China has agreed to keep the rare earth supply flowing. No discussion with regards to NVIDIA's Blackwell chips, whether NVIDIA is going to be led back into the country to be able to sell those chips. He said, well, that was not discussed. And agreed that President Xi will work very hard to stop fentanyl into the US. So, that's just trickling in, and we'll keep an eye out because this is market-moving stuff. We have to take a quick commercial break here because it's the economy on the other side with my colleague Lata. She's speaking with Vishwas Raghavan of Citi on the US and global growth momentum and whether foreign flows will turn back. Stay tuned.